welcome. You're watching Money9, India's first multilingual platform for personal finance from the TV9 network. I'm Sakshi, Batra, and on this special, I'm joined by a very special guest as well. Mr. Andrew Holland, who's the CEO of Avendus Capital, joins in. Now, Andrew is a very renowned name when it comes to the financial services industry. He brings with himself a wealth of experience of almost 4 decades when you talk about markets, not just in India, but also UK, Asia, and Japan. It's a pleasure to have you with us on Money9, Andrew, and thank you very much for joining in for this special.
My pleasure. Thank you for inviting me.
Thank you so much. Let me begin by understanding from you as to how are you approaching the markets currently. You have seen over the last 4 decades how the Indian markets have moved, various cycles you've already seen. It's been a fascinating journey of the markets in the last 1 year, despite the pandemic, the kind of resilience the markets have really displayed. And after the budget, the kind of triggers that the markets got, there was a tectonic shift that we actually saw as well. Most of the experts talked about that. What is your sense of the markets currently and the fall that we have seen today and in the last 3 or 4 trading sessions?
Yeah, well, I think the fall is more to do with possibly global factors rather than local factors. We have been seeing bond yields rise in the US, and if the argument's been made that equity markets were continuously cheap, one partly because of the kind of flow of money from the central banks, and interest rates remaining low, equities were cheap. Now, if bond yields are rising, then there's got to be some correction somewhere. We can't have bond yields rising and markets continue to do well. So it just might be maybe a 5 to 10% correction. That's all from the highs. But I think the kind of longer term picture for India is still very strong.
The markets are still quite high, and is there any kind of a discomfort as far as the valuations are concerned?
I think for India, the valuations were around about 20, 22, 23 times 1 year forward. But what we'll see over the next 1 year is that the earnings will start to increase, quite significantly, probably 20 to 25% FY21, 22, followed by, maybe a similar amount the year after. I know there's higher figures out there, but we think from what we can see at the moment that these are the kind of earnings growth we would be expecting. Now, the upside to that is obviously, what the finance minister did was tick all the boxes, but with infrastructure spending, with the real estate market picking up, and it's still early days, but it does look very promising. All of these have multipliers effects for the economy across many different industries. So that operational gearing for companies could kind of accelerate going forward, in the back end of this year. So our forecast might be a little bit low. So I think if you were here 2 to 3 years down the road and we look back and we said, okay, the market was really on a PE of 15, it's not so bad, right? It's not as high. So I think you have to look a little bit longer, and if you're confident that those kind of earnings can be achieved, then the market still has some way to go.
Okay, and with the current consolidation of the last 4 or 5 trading sessions, do you believe that this is it, or is there further correction on the cards in the immediate term? And how should investors really view this dip? Should they invest more in the quality sectors and stocks, or should they still wait for some more correction?
So here's the kind of short to medium term picture, which we've been saying now since last September, October, is that given obviously Biden, a vaccine was going to happen, and interest rates remain lower for longer across the world, then investors would look for growth and yield. And where would they find that? They'd find that in Asia, led by China, which did very well last year despite COVID, and India. So we think the flows from foreign investors will be towards emerging markets, and particularly Asia-led. And our kind of more medium-term thinking is that the millennials will be the ones with the real spending power over the next 5 years. And if you think about that in terms of numbers, there's about 60 million in the US, and there's over 330 million in India and China alone each. So you know where the spending power. So you're going to get these short-term corrections. Yes, there could be another 3, 4, 5%. That we could see. But when you're going to have this global recovery along with our own economic recovery, then the sectors you really want to focus on for that would be the banking sector, industrials, energy, and consumer discretionary. So, timing, trying to time when to exactly buy the markets is always fraught with that danger. What I would say is that, and what I do is basically I buy SIPs because I know I'm going to buy sometimes a little bit at the top, sometimes in the middle, and sometimes at the bottom. So if I'm doing this, overall longer term savings, I would do SIPs.
Absolutely, and you've pointed out two very interesting aspects, and I want to touch upon those itself. You talked about SIPs, and what we are seeing is that in our survey also that we had done on Money9, the most popular investment form or option came out as an SIP. Most investors prefer to do investment in this way. But we're still seeing that, the amount of retail investors in the country is still too low. So, A, what could have been the reason for that despite the number of advisors increasing, the platforms increasing, simplification happening in the markets? That's still not happened. One, what is the reason behind that? And anyone who's looking to get in, what is the hindrance? What is stopping them to be on the sidelines right now?
I'm going to be broad in my answer because it's always tough to gauge why people don't come in. I think for a number of investors that I speak to, either they've got their fingers burnt a little bit, and that could be a factor of when markets are kind of racing ahead, everyone's making money and everyone's got buying at the bottom and selling at the top, right? And we go to a party, everyone's got a tip for us. So those times, is when the market falls and you get hurt a little bit. I think the second part is, maybe just putting lump sums in, and it just unfortunately doesn't time the market, and market comes off after that. But I think that, to my mind, the expectations is really where you got to kind of educate people. I think we see markets going up and they think, we can make 20, 25%, 30% very easily. But I think if you just set your sights at maybe a 10 to 15% kind of growth compound over the next 5 years for the markets, and you might see some year where the market falls. But if you can ride that through on the longer term view, then you'll make some good money. And I think that's where the SIPs come in very well, because it will help you kind of navigate the ups and downs of the markets quite well and still get a strong return at the end.
Absolutely. Would you also, you did say that, a whole lot of millennials coming forward will have much more purchasing power, and there will be an increased investment that we can see over the time as well, and the kind of returns that we are seeing may actually go up higher even, as well as far as the equity markets are concerned. But, where are you putting your focus on currently? Do you see mid caps and small caps also turning more attractive, or would you still bet big on the large caps if they need to invest now?
I think at this stage, if you're to set off today, I would have, a larger weighting. Let's say you had 100 rupees, I would probably have, something like 70 towards your large cap blue chip, companies, and that could be a mutual fund, or you can pick out, the stocks that you, believe are the blue chips, and just do a normal SIP through them. I think of the balance kind of 30 rupees, I'd probably have 20 in mid cap mutual funds, and then 10 in small cap mutual fund. So it's nice diversification to give you that barbell approach. Unfortunately for mid caps and small caps, unless you've got plenty of time to really analyze each of the companies, know them inside out, and be able to meet the management, it's very tough to pick out these stocks, because you're fraught with a lot of danger as well and risk. So I would do more mutual funds for the mid caps and small caps, where the managers are meeting them on a regular basis and keeping themselves up to date with how the company's doing, what's happening in the competitive landscape for them, and doing their channel check. So that's what I would do.
I wanted to also touch base upon to understand that recently we got this data that in January we saw record number of SIP accounts open. We also saw that at the same time mutual funds were actually seeing outflows. So how do you relate both these data? Plus, how do you read the record number of new demat accounts opened in 2020? Is the trend here to stay, or was it just because of the pandemic that people got into markets and investments?
No, I think more and more people are using the financial markets as a way of saving. So, the good news actually is that, what you were asking me is happening is that there are new investors coming in. I think the reason you're seeing some of the outflows from the mutual funds is a lot to do with people worried about the levels of the market. They've seen, or they had that kind of scare of the market falling, quite sharply, this time last year. I've seen that recover and just saying, yeah, I want to protect a little bit of capital. And you always get this at this, the start of a longer move in the market. I think people tend to think about, the market rose from, 8,000 at the low to 15,000. I'm talking about Nifty now at the high. But if you look year over year, it's only really about a 13, 14% increase that the market saw. So it's normally in line with where the markets are on a regular basis anyway. So I think that's why we're seeing some outflows. It's just people saying, I don't want to take that kind of risk at the moment. I've got good profits, or I've done what I've done. I think the other thing is obviously, what we're seeing in the US and we're seeing here now is people taking charge of their own decisions on buying individual stocks. When markets are good, people make money, and they will continue to think that will be the case. So it's just a warning, not a warning, but it's really kind of saying, just slightly be careful. Markets can hand you losses as well. So mutual funds is where I would look to kind of place my money, and maybe put a small amount of which I say, I'm okay to lose this if I'm going to kind of buy or trade individual stocks.
Okay, so you're betting big on SIPs and mutual funds for the new investors who are entering the markets, who may not have that much knowledge, but that's the way to be and grow. But as far as diversification is concerned, there are many assets that have done well even in 2020, including commodities like gold as well. And, the alternate asset class like Bitcoin have actually surprised the experts and investors alike. And there is a renewed interest by the millennial community, at least as far as investment in Bitcoin is concerned. What is your view on cryptocurrencies? And B, how do you advise the millennials and the new investors who are getting into the markets right now and starting their investment journey? How do they build their portfolio for the long term? How much should they invest in equities? What should be the percentage of the other assets, and which do you feel will provide them returns in the long run?
So typically, depending on obviously your age, you kind of the rule of thumb is always to take it away from 100, and that should be your equity exposure. The balance should be debt. Now, let's just say you don't want to have all of that kind of so nicely bucketed. Then usually, typically, in developed markets, you'd have anywhere between 10 to 20% of your assets in alternative investments, and that can range from art to wine to cryptos to whatever is more alternative in that respect. Hedge funds, like we have ourselves, we have our own fund here, so we see a lot of flows from high net worth individuals into our funds as part of that allocation into alternative assets. As regards Bitcoin, I'm fortunately kind of in that position where I bought some long way back now. And I really bought it for the reasons that are coming out today, is that it's going to be a currency that could be used not by probably by me, but certainly by people who whether it's the millennials or the Gen Zs now, who were used to just dealing faceless, having not really going to go to a bank, maybe don't go to the shops that much. So for them, it's very easy to take on this type of a currency, which to them is something that they normally think about anyway. So I think it probably has a longer kind of life to go. I think that the key to my mind will be this. Whilst it's gaining acceptance now, let's just say you wanted to buy. Sorry, you wanted to sell something, and I said, okay, I'm going to buy this off you in a Bitcoin. Now, you as taking that Bitcoin off me would say, well, hold on, Andrew, it's kind of fluctuates 10 to 20%. In a couple of months, which you don't get from a normal currency, right? If I paid you in rupees, you're not going to see a 10 to 20% rise and fall in the rupee, within that time period. So I think that's what's going to happen next, is that volatility of the Bitcoin would have to be a little less volatile for people to start accepting it as currency, for goods and services.
Okay. And lastly, I wanted to ask your outlook on the markets. What do you think the markets will look to now, with the budget now behind it, the earnings also behind us, and a whole lot of triggers being, achieved from those as well. But now going forward from here, what is going to be a catalyst for the markets going forward, since you did say that the long-term story is still intact?
Yeah, so I think that will continue to play out, but I think we always have to look to what's happening in global markets, because flows, for whatever reason, if say global markets were to fall, then what typically happens is that investors want to take risk off the table, so they take money back home for the short-term period, while whatever volatility or risk that they're seeing kind of goes away, and then they can relook at what they want to do. So that would have, if you take that, our markets have been the beneficiaries of strong foreign investment flows in the last month to 2 months, and the domestic institutions have been really selling. If the foreign investors were to sell and it's still sell on the domestic side, then the markets would obviously fall because of that. So that's also as an opportunity, because I think that the medium to long term for India is very bright for the reasons I mentioned. So I would use the opportunity to, if you haven't started a SIP, then it's a good time to do it. I think what I would, there's always a debate actually about time in the market or timing the market.
Yeah.
Okay. Now here's where I stand on this: is that I'm not one for trying to say now is the best time to buy. There will be certain reasons on fundamentals and PEs. But when you say time in the market, I think you have to look at how you utilize your money, right? So if I think real estate is going to be something that I should be investing in for the longer term, that might give me better returns than being in an equity market over the short term. So those are kind of things you have to look at. So whilst I can say that the equity market will give you a 15% return, I think each and every year you should be looking at what is the opportunity cost against equities versus other asset classes, which is what you were trying to say of how to diversify, not just all be in equities.
Absolutely. Thank you very much, Mr. Holland, for speaking to us and giving us this whole perspective about what you believe the markets have in store for all the investors, and for all the new investors. How should they really, begin their investment journey if they're beginning today? SIP, you bet big on. That's the way to start. Whenever you want to start, without even much knowledge, you will be able to reap the benefits that the markets really have to offer in the long run as well. It's been a pleasure to speak to you, Mr. Holland, and we hope that many more opportunities will be there where we can interact with you and understand from you a whole perspective on the markets as well. Thank you very much for joining us on this special show.